Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, Northstar Commodity. Mixed trade in both the grain and livestock futures today. And Mark, let's start off talking about the grain trade. Row crops were higher, led by soybeans. Is that rally some of this China business that's being talked about, that they're going to buy some old crop soybeans from us, or was there something else?
No, I think for the most part, it's again, we're seeing some of the business. We're started to see bean prices in Argentina and Brazil rising over the last 2 to 3 weeks, and we've had some excessive rains in the last 30, 35 days in far southern Rio Grande do Sul, where we had about 25% of the crop still left to be harvested. It's probably moved now to maybe 20%, but the flooding has been substantial. And probably underestimated the damage that could be done. At first, I thought maybe 40 million bushels might be lost. That might be closer towards 70 to 100 million bushels. Wouldn't surprise me on that one, because even bins are grain stored in storage facilities, also taking on a lot of water as well. So I think you've got some issues there, but it's firmed up on the prices, and in turn, that has meant U.S. being back to being competitive in the world market, and we're seeing some business coming our way.
No doubt. Now, from a technical standpoint, July got up into the 1250 area, not very far from the high that we put in here just a few days ago. So do you think we're going to break above that level? And if we do, where could we run to?
Okay, so here's my thought. The key number to me that I'm watching anyway is 1258 on the July beans. If you can close above 1258, and I think it opens a door, and you might have a quick strike to $13 beans. Now, if by chance you can start doing that, and you get this meal market, which is now only about $10 away from posting new highs for the move, if that meal starts going on July meal about $390 a ton, I think beans will hit 13. I would not rule out 13 and a quarter on the July beans before this is all said and done.
Yeah. So corn has been following wheat, but it was lower today. So did corn just follow soybeans, or what held the corn up?
The corn probably still hasn't had much of a move. I mean, it's gone up some, but wheat's been the bigger mover in this market. And I think the wheat probably just ran out of gas. Besides that, as I said earlier, we're getting closer to a wheat harvest to begin here. So you're going to see some pressure, and I would guess the farmer's selling when it gets back up at these levels, because obviously I don't think we're looking at a bad wheat crop here in the U.S. It looks like it's going to be a big yield potential. So I think you see some farmers selling, that pulled back a little bit, and that maybe slowed the corn a little bit. But also, same thing, corn prices in South America, corn prices in Ukraine are all firming up. And then look at the other difference that I see is the spread difference between wheat and corn. You're trading $2.30 wheat over the price of corn. Chicago wheat versus corn, we were 90 cents probably about 6-7 weeks ago. When you get up to these levels, I'll just about assure you, if anybody's feeding wheat in the feed rations to livestock, you're going to take wheat out of the feed ration and replace it more with corn.
And if you look at a chart, Mark, on corn, we're still within our trading range, aren't we?
We are. For the short term, watch 465 on July corn. You got to clear that first. And if you do that, then I think we go back up to the previous highs. The other thing I pointed out to some of our customers is just look at your corn price in Europe. And again, we saw Spain in now buying some corn. But corn prices in Europe for the month of June are back to their best level since August of last year. If we were to do that with July corn here in this country and go back to the highs of where they were in August, we'd be trading $5.25 a bushel. So you can see the difference of how that all of a sudden makes U.S. corn look a little bit more competitive. That's good. The other one I would still say that we've got to watch, and that's still the Safrinha corn crop. The harvest has begun down there. We still have this huge discrepancy between USDA, the size of the corn crop, not only between Brazil and Argentina, but also combine them together. We're still some 10 to 15 million metric tons. The South American countries believe their crop is lower. USDA is that much higher.
Yeah. So winter wheat contracts went up, made new highs for the move, and then we ended lower on the day in the entire wheat complex. But that weather narrative, the global production concerns, that is not over, is it?
It's not over. The forecast kind of keeps flipping back and forth on the extended outlook in Russia and parts of Ukraine. They've been on a drier trend now for probably since February. And it still looks like, at least as of yesterday, coming into today, it went back to what, above normal temps, below normal precip. You're probably going to get into a time period when you get to probably this June 5th. It probably won't matter. If you don't have the moisture by that time, I think it'll be a done deal, and you should have yield losses. I think the big key here would be is if the Russian wheat crop starts falling below 80 million metric tons, I think you have a better story for the wheat in the big picture.
But the big key here, Mark, is does this global production downfall translate into some exports for the U.S.?
We have seen that start to improve. The wheat market is showing that at the present time. I think I look back, it's 5 of the last 6 weeks that we've actually done okay. Now, they're not great wheat sales, don't get me wrong, but they've been better than what we need to be to meet USDA's target in the big picture. So I think at least it's getting some business has started to improve. We're competitive, and we need to be, because we've got a strong dollar. So we need these other countries to have crop problems. We've talked about that before in here. And I think what you do have is the potential that the countries that export wheat into the world market, those are the countries that have some crop problems. So therefore, you're getting the exportable countries carryouts getting into a much tighter situation.
Yeah. Cattle market, new highs for the move today in both the live cattle and the feeder cattle futures. We had some 192 cash trade up in the north, so some higher money there. Do you think this market is going to be able to kind of retest the old contract highs? Is that where we're headed?
Well, I spoke last week to in Tulsa, and that was the question asked, and I said I'm really not sure which way this wants to go. I could write a script. Fundamentally, I do think it's going higher in here. We could go back and test the all-time highs. That would not surprise me. I think for the short term, you probably got another $2 or $3 up on the futures. I think the amazing thing has been last week's performance in the cattle market. Basically, in the cutouts and in the cash were just impressive. When you're buying cattle 30 days out or 25 to 30 days out, and you're paying 188 to 190, and you've got the futures trading at 178, that was just a huge sell the cash. And if you want to be bullish, buy the futures. And the market just pulls on up. So, and we're still at a discount. Therefore, I still think we got another $2 to $3 to the upside yet.
Yeah, and the funds, they got room to add to that long position. It's not that long.
Yeah, that's the other nice thing about that is they really didn't, with that big move last week, they really didn't do much to the long side of the market in here. So I think it's worked out well. Yet the farmer or the livestock cattle guy who has sold his product in advance, and you've got people buying it on the other side, and the funds do not have a lot of length.
Yeah. Meanwhile, the hog market made new lows for the move today. The funds are still pretty long there. And I think, didn't we take out the 200-day moving average today? So how much farther down do you think we have to go here?
Well, I've had this day and this week as timing for a potential low in the hog market. Fundamentally, in the way it's still structured, certainly didn't do us any favors, and the trade action today was not very impressive. In fact, it was a little bit dismal. But if you look back at the charts, your July, your August hogs, you're getting at some levels of right where we broke out to the upside back in February. So we've come back down to the breakout points there. So I'm hoping that we got something going. The problem being is that even though the futures are down at this level, they're still trading at a $3 and $4 or $5 premium to where we are with the cash and the cutout price and the cash index. So the issue gets to be is that we've got to see an uptick in pork demand, which we've lost in about the last 3 weeks. It just fell out of bed. You've got to get something that improves there and get going. And if we do, then maybe we've got a better time. But you made a great comment. The fund's still long, roughly about 56,000 contracts coming in this week. I know it's down from 96,000, but I'll tell you, 56,000 is still a big number on the long side of that market.
Yeah, certainly something to watch there. All right, thanks. Mark Schultz, Northstar Commodity. That is Markets Now.